Hello traders, this is Cliff Wachtel, Chief Analyst, AnyOptions.com. I'm here to talk about some of the key trends that we can play in the coming week, particularly for the euro dollar and the euro yen, based on a couple of very key event risks for this week, in particular the European Central Bank rate statement and following press conference. Now let's get started. First thing you have to know is that over the past 8 weeks, the euro dollar and the euro yen have been rising have been in a steady uptrend. Why? Well, basically you can see, if you take a look at our favorite picture of overall risk appetite, the S&P 500, the euro has been, risk appetite, optimism, has been in an uptrend, pretty much uninterrupted, hardly ever even testing support like its 50-day moving average or its rising trend line or even its 20-day moving average, almost uninterrupted, showing terrific momentum as it spent most of the time in its upper Bollinger Band, at least until we had last week's trouble in the Middle East and oil price issues. Now, in an atmosphere of rising risk appetite, that favors the euro over the dollar and the yen because it yields more. In times when people are feeling good and want to take risks, the euro does better, and that's been one of the key forces behind why the euro has been able to rise against the dollar and the yen over the past 8 weeks. Looking at our weekly charts, that's been one reason. Recently, however, we've gotten another reason that has been powering the euro dollar and the euro yen, keeping the euro higher in general, even though there's all this trouble in the eurozone with the pigs economies, threats of default. Nonetheless, these assets move with risk appetite, and risk appetite has been moving the euro higher. But as I mentioned, the euro has now had another force causing it to go higher, and that has been increased speculation about rising interest rates. Now, keep in mind, the Fed, the central bank for the US dollar, and the Bank of Japan, they've both been very dovish. They're anti-interest rate increase. They want to let it go easy and give growth a chance to take effect, let their economies recover. Whereas the European Central Bank is typically more of a hard money, we want a hard currency with value. That's typically been the European Central Bank approach. That's what's kept the euro up over past years. And recently we've had speculation and that's been really evident in the euro dollar, that rates are going to be rising sooner. Why? One, the eurozone has had inflation issues. Secondly, there have been a number of comments from European Central Bank members saying that they want the European Central Bank to be raising rates, that they're very concerned about inflation, and compared to the very dovish la-di-da attitude they're looking for of the Bank of Japan and Fed, this has given the euro a boost, because in the short term, of course, currencies move with expectations of increasing rates, because rising interest rates boost demand for a currency because you can get more yield in instruments of that particular currency. So these are the two factors that have been moving the euro up. Overall risk appetite, as we saw pictured by that nice long uptrend of the S&P 500, and also rising expectations about interest rate increases. Now, the next big hint that we're going to be seeing is about whether these expectations for interest rates are true is going to be coming from this Thursday's European Central Bank press conference that follows its rate statement. Now, these press conferences tend to be very closely watched because this is where we get hints about future policy of the central bank, future monetary policy, where they are going with interest rates. Now, here's what to watch for. If Jean-Claude Trichet, President of the European Central Bank, emphasizes the need to be vigilant on inflation, if he says, we must be on guard against the inflation, if that's his emphasis, markets are going to see, oh yes, Jean-Claude has gotten very hawkish. He is more hawkish, meaning pro-rate increase, and that's going to be good for the euro, and we would expect the euro dollar and the euro yen to be moving higher in the hours following that press conference. That would mean short-term traders playing those hourly trends, playing daily trends, you would find the probabilities in your favor by going long the euro dollar, long the euro yen. Binary options traders, again, binary options are an ideal instrument for playing a simple trend bet, a simple forecast about a trend. The higher probabilities would be to go with the call options, because those would help you profit on an uptrend. If, however, on the other hand, Jean-Claude Trichet is very concerned, if his emphasis is concern about growth rather than inflation, if he's saying,
the growth, it is a problem, c'est grand problème,
and he starts talking about how he's worried about how oil is going to affect EU growth, and if he's worried about how the pig economies, particularly Greece, Ireland, and Portugal, how they're going to, if they're going to be able to keep making their debt payments. If that's his emphasis, then markets will interpret that as dovish, as anti-rate increase. They will say, there's no increase rate likely to come soon, and we would expect the euro dollar, the euro yen, and the euro in general to be downtrending. And so those playing short-term downtrends would be wanting to follow, the higher probability for profits would be following the downtrend. Binary options traders would be looking to buy puts on the euro dollar, on the euro yen. That's where your probability would be for just making a nice simple trade on that trend. Now, that's the simple picture. There are a few other things to consider here. First, looking back again at risk appetite, and our favorite picture of that, the S&P 500. Now, that's been, as we said, it's been moving beautifully. What caused it to break down last week? Worries about spiking oil prices as the unrest in Middle East and North Africa hit Libya and cut oil production. As those concerns eased this past Monday, risk assets like the S&P went up as oil started to flow from rebel-controlled areas. And then the next day, however, we got rumors of possible strife in Saudi Arabia, and that's the oil producer. And not surprisingly, risk assets like stocks tanked. Now, if these are the things we have to consider in addition to the ECB decision. Regardless of what the ECB says, if oil prices are expected to keep on rising and there's continued strife in the Middle East, that could override anything that goes on at the European Central Bank press conference. That will mean that risk appetite assets are going to drop. That's going to mean that the euro yen and the euro dollar are going to be going down, and you'll want to be playing those downtrends. Binary option players want to be playing those put options. What other things could cause risk appetite to deteriorate besides events in the Middle East? Of course, there's issues in the Eurozone. In particular, we're worried that the new Irish government was just elected with a mandate from their voters. They were saying, "You got to help us out with the bailout. We can't afford this kind of thing. Please, you got to go and negotiate us a better bailout." And again, that's the new Prime Minister, Enda Kenny. Mr. Kenny, you got to get us a better deal. We can't afford this. I can barely afford a Guinness. So we fully expect the new Irish government in the coming weeks. They've got to attempt to show their voters that they're trying to get a better deal. If they're sounding militant and really pushing hard, this will be very bearish for the euro, because if Ireland can get a better deal on their bailout, Greece and Portugal, which is also supposed to be getting a bailout soon, will be expecting a better deal as well. And that means losses for the people who are holding all of those Irish, Portuguese, and Greek bonds. And who's that? The big European central banks, and more lately, the European Central Bank itself. They'll be taking losses. This means uncertainty for European banking, uncertainty for the Eurozone. And that would be a real trouble if the Irish are saying, we're not going to be paying that bailout, laddie. You've got to give us a better deal. We've got to have a better deal. We can't afford it. That'll be a problem. And In addition, there's one other thing we have to be watching. The following day, in America, we've got the U.S. monthly jobs reports. Last month, jobs reports were terrible, far below expectations, and expectations are very low for interest rate increases for the U.S. dollar. This month, the U.S. is expected to go from creating 36,000 jobs to creating about 176,000 jobs. If they get anything close to this, that will be a huge improvement for the U.S. jobs picture. And because expectations are so low for the U.S. dollar, we would naturally expect that the dollar would be sensitive to any kind of positive news, and we would expect to see it get stronger. And if the U.S. dollar gets stronger, that means the euro gets weaker. And again, not just against the dollar, but that would put some pressure on the euro in general. And again, that would put the bias toward the downside for the euro dollar and the euro yen. And we would binary option players again would be looking on the hourly, daily basis to be playing the downside with put options. This is Cliff Wachtell, Chief Analyst, NAoption.com. In summary, if the ECB conference is prorated, sounds like they're considering sooner rate increases, that will boost the euro dollar and the euro yen higher. If not, expect the opposite. Expect them to head down. Expect a sell-off in the euro dollar. Similarly, if we continue to get big trouble with spiking oil prices, that will weigh on the euro and push these pairs lower. And if we get very good news on the or even some significant improvement in U.S. jobs, that could push the dollar higher and bring these euro pairs lower on. I do have to give you a disclosure. The lawyers make me do it. What can I do? That this is all purely for informational purposes. Trading, the decision is up to you. I'm not claiming I really know. I'm taking the evidence, giving it to you as best I can. If I really knew, do you think I would be here? No, not really. Anyway, this is Cliff Wachtell, Chief Analyst, NAoption.com.